Hi everyone, Adrian Player here, Integral Loan Solutions. We're just going to give you a quick update on the home loan interest rates and what's been happening the last couple of months. Make sure that you're informed. All right, the 5-year fixed rates have actually gone up to about 1%. This has happened over the last kind of 2 to 2.5 months. On the 4-year fixed rate market, what a lot of people saw was the big banks were giving their best overall rate deal on the 4-year fixes. That got bumped up at the same time that the 5-year fixes got bumped up about 2 months ago. And I guess the reason why it was such a good offer that was given on the 4-year fixes was because the big four and the big six banks were losing market share to the majors. So if they wanted to give you a good deal, they wanted it to be on a longer term fix. So then you're staying with them longer and they're not losing as much loan book size to the mid-tier banks. So what we've seen is all the 4-year fixed rates go up as well. Most of them went up between 0.5% and 0.7% after they got their fill of loans through at that rate. And then what we've seen in the last kind of 3 to 4 weeks is the 2 and 3-year fixed rates have gone up. So the first ones to move the 2 and 3-year fixed rates was Westpac Group, quickly followed by NAB about a week and a half later. And then we saw Commonwealth Bank follow suit, and we're thinking that the majority of the mid-tier banks will be following suit as well. Now, the 2 and 3-year fixed rates, by and large, have gone up 0.1%. So most of those 2-year fixes that you're seeing at the moment, 1.89% range, is going up to 1.99s at the moment. Now, we can't be sure that every bank's going to bump up their rates, but normally when the major 3 or 4 banks move theirs, the majority of the market follows. All right, not a lot of people know that the reason why a lot of these rate changes have occurred is due to the funding costs that the government and the RBA gave the big banks during COVID-19. They struck a little bit of a deal saying that we're willing to give you 0.1% funding cost for your loans, so you don't have to source the money from overseas markets. But if you take these loans, that you're actually going to continue lending during COVID-19. So the majority of the banks took this up. A lot of these loans actually stopped in June of 2021, which is why we've been seeing a lot of these interest rate increases, because a lot of the banks now have to source their funds from other sources, including overseas, which includes currency and hedging risk and things like that. All right, and then lastly, I just want to say that the variable markets have been operating a little bit differently. We've seen some lenders like an AMP actually drop their variable rates recently by up to 10 to 15 basis points. So there are a couple of the mid-tier lenders that kept their variable rates a little bit higher than some of the others, and they're starting to attack the variable side of things at the moment. So some of the variable rates are getting closer to where the fixed rates are at the moment. So I really hope that you've enjoyed this market update. I'll continue putting that good information out there. And if anyone needs any help, either send me a message or I'll leave my contact details in this post. All right, really hope that this has helped everyone. Stay safe during COVID-19. Stay safe during the lockdowns, and all the best wishes from Integral Loan Solutions, my family, and my wife Maria and I. All right, you have a great day. All right, bye.